Hello and welcome. You're watching Commodity Champions. I'm Manisha Gupta. Well, the global metal stocks have been in focus after China said it will withdraw its 13% export tax rebates for select producers or other products made of aluminum and copper from the next month. Well, the announcement has sparked a sharp rally in the prices of aluminum, which has already surged around 11% so far in this year. China's move is expected to curb the excessive supply of Chinese aluminum abroad. This also comes just months before Donald Trump is set to take oath as the U.S. president. Remember, he has vowed to ramp up tariffs to defend the American industry. Under his previous term in 2018, Trump had imposed a 25% tariff on steel and 10% tariff on aluminum imports, among other import duties as well. This had led to the global base metal index tumbling from 132 in January to 85 in December in the same year. How will the China factor support prices in the future, and what will Trump's return mean for the sector? Joining us now to make sense of all of that is Kunal Shah, Head of Commodities Research at Nirmal. Peter McGuire is CEO of XM Australia, and Dhruv Goel is CEO at Big Mint. Gentlemen, hi, thank you so much for being with us. And there's just so much happening in this week. China is one part of it, and then we also have seen escalation between Russia and Ukraine, with the US allowing those missiles there. So clearly, commodities is going to be quite a factor there. We have seen dollar index come up a bit. Gold and silver seem to be doing well, and the base metal prices as tangible commodities clearly are in a knee-jerk reaction. Kunal, to you first, and to the Russia-Ukraine factor first, and a lot perhaps is what the markets are anticipating now in this week in sense of statements, paper signings, and action as well. What's your sense on how should metals be dealt with that kind of a background?
Yeah, so on one hand, we have Russia and Ukraine going on the ground, and on markets, we have US and China. So it's been quite evident and quite clear that China wants inflation to come in. China wants to follow the protectionist move. They want to create shortages by cutting the tax rebate. The exporters are not going to export the way they used to. There will be glut in the domestic market in China, but they can always tell their state reserves to buy those purchases and absorb the glut. So this clearly means that metals market are going to be very tight in next 3 to 6 months, because this is just a start. This is a beginning of Trump has not resumed his office. And even before Trump joined and put sanction on China, China has already started to take its own moves. So on the ground, Russia, Ukraine going on, Israel and Lebanon going on, Israel, Iran going on. And in the markets, it's going to be bigger war between US and China, a shift of power. The power battle begins. And China being 50% consumer of commodities and major producer of commodities, China's action will definitely determine the outlook on commodities. And we believe that that is going to be inflationary, and metal prices are going to be going to witness significant upside over next 3 to 6 months time. So there will be shortages in the global market. There will be surplus in the Chinese market, but those surpluses, I assume, will be absorbed by the Chinese state-owned enterprise because their debt have been repacked, or you can say we've seen a debt rollover happening in Chinese state reserve bureaus. So this is going to be push and pull, and metals should benefit from it in a very big way.
And that is something that we already have seen coming in. Metals actually in last 24 hours have done quite well. But this one is to you then, Peter. And well, yes, I will come full-fledgedly to China in a bit, but Russia-Ukraine clearly seems to be like a bigger headline at this point in time. How are you reading into this, and what is your sense on a bigger macro impact that we could see on dollar index and the metals?
Well, I think, Manisha, 106.30 at that US dollar index, building on what Kunal mentioned as far as, the situation in China, domestic demand, what happens as far as moving forward with President Trump's initiatives and how effective he's going to be and how aggressive. One needs to consider what he did in his first term. Is he going to take the gloves off in the second term and be far more aggressive? And that seems to be the general theme that people are hearing. So this impact is going to, I think, set the market in some ways on fire. So I think that there's going to be one thing for sure, probably dynamic volatility across the whole base metal complex. As far as US dollar index, look, you've got to think maybe 108, 109 is capable of hitting. I know that's probably a very, very bullish call from here, but the whole consensus is US dollar is going to take a run up. And if there is any form of hostility, if that really ratchets up, building on Ukraine and Russia, then that's going to cause, I think, much concern, and there's going to be a flight to King Dollar, Manisha.
Peter, 2018, let's take a step back, and that is when we also saw a trade war between US and China, and we saw huge price movement because of that as well. But this time, not just that, and as Kunal was mentioning as well, we have this anticipation already building up, but there already are a couple of wars going on around the world. We also are looking at renewables coming back in a very strong way. So the world from where it was in 2018 to where we are in 2024 is quite different, would you say? Peter, this one is to you.
Oh, sorry. Yes, absolutely, Manisha. Sorry. Yeah, it certainly is far different. And I think it's far different in so many ways because you've got a changing of the guard. You've got a different dynamic considering the Biden administration versus Trump administration. And I'm not sure whether President Trump, he has a different agenda, I think, as far as what he expects to see on the domestic footprint of America. The drill baby drill mantra, certainly the return of manufacturing, and really, the tax changes and what he's prepared to do, I think, domestically. He's also on the back of COVID. It's a rerun to make America. He wants to turn it into an economic powerhouse, Manisha, from 22 possibly to 25 plus million barrels a day of crude or more. So I think the whole enterprise of the US is something we may not have seen in many, many decades, and that's what his agenda is going to be. Whether he's going to be successful, who knows? This is going to be certainly the apprentice on steroids, Manisha, for him to create what his footprint is, what he's trying to achieve, and we're going to sit here and probably observe it and go, wow, either he makes it happen or he fails dismally, and I don't think he's going to fail.
Oh, well, that is still a couple of months away before he really gets sworn in, and things can go a lot of different ways in next 2 months, yes, the way they are moving right now. Dhruv, let me come to you, and let's talk about steel first. And when you look at it on a month-on-month basis, yes, we are looking at positive prices there. This is international markets, of course. And when you look at this year until now, it's a double-digit negative that the steel prices are trading in. When it comes to production in China, we've seen numbers grow up there. We've seen steel exports also continue quite strong from China. How are you making sense of all of these numbers?
Thank you, Manisha. So you're right that this year there has been a sharp fall in the steel prices, both in the global market and the Indian market. One of the biggest reasons being that China is very active in exports. If you see their export numbers, it will be crossing over 100 million tons, which will be 8 years high. And the indirect impact that has happened on Indian market is the markets which were being catered by Indian steel makers. Most of those markets are now being catered by Chinese steel makers, and they are very competitive. So this year looks to be very tough for the global steel industry, including Indian steel manufacturers, although demand in the domestic market is relatively good, but definitely the margins are under pressure.
Oh, well, absolutely. Dhruv, what do you make sense of the global macros as well, with the way dollar is moving, with what's happening with US and China? Have you been able to do any calculations on what happened in 2018 and if there's a repeat of that expected in 2024?
Although things would be a little different, what it was in 2018 and what things will look like in 2024. But just one thing which I would like to add on the aluminium front. The same measures were taken on steel in 2021 when the Chinese government had, cancelled all the rebates on steel exports, again with an intention that they will probably be able to create some inflationary, issues in the global market. And the second objective was that they would want to cut down the unnecessary or unessential exports of steel, which were contributing to their carbon emissions. But if you see now, the exports have almost increased 30-40%, despite there is no rebate on steel exports. So I agree that in the short term, the aluminum prices will remain on a higher side, but long term looks a little uncertain for us.
Oh, absolutely. Also, how are you looking at the prices itself? Do you see the trend changing anytime soon, or would you feel that whatever China has done until now in sense of policy measures, stimulus measures, isn't really enough?
We think it is not really enough. The problem in China are fundamental. It will take some time for Chinese government to fix those problems because again in context with steel, property and construction being the largest consuming sector in China, and they are doing very badly in that region, and that will have impact on the global steel industry.
Oh, absolutely. China has done a lot of stuff, but not big enough and not enough to ensure that the domestic demand or consumption really picks up. This one is to you, Kunal. And since we were talking about aluminum just a while back, I was reading a report which says that global demand for aluminum, China accounts for nearly 63% of that. I mean, that is how important China is in the whole gamut when it comes to metals. They are still equally important there. But aluminum, and we've seen that one outperform on an year-on-year basis, 16% of gains coming in for aluminum. Would you continue to be bullish on aluminum from these levels also?
I could not hear. I got some interruption, network issues. So can you please repeat your question, Manisha?
Sure. Kunal, I was asking you about aluminum. We are far away from all-time highs, but we are higher on an year-on-year basis. Would you see more gains from here?
Okay. First of all, before we go into the outlook of aluminum, the key ingredients to make aluminum, bauxite and alumina, both these commodities are required to make aluminum. From bauxite to alumina. So alumina earlier used to account for 25% of the manufacturing cost of aluminum. Right now, it accounts for the 50% cost of the aluminum. Alumina prices on Shanghai Exchange have risen from 3,500 tons to today roughly around almost 5,200 tons. So I'm talking in yuan terms. So, well, this is quite staggering move, 40-50% rise in alumina. The cost curve of alumina have shot up significantly currently. So it seems very unlikely that aluminum prices are going to go down significantly from present levels. The maximum downside is 3 to 4%. Now coming to the possible upside. So on the demand side, we are not seeing any big moves. I think the aluminum bullish calls are mainly coming from the supply side issues in the key aluminum producing components, which is bauxite and alumina. There is quite a bit of shortage over there, and it doesn't seem that these shortages are going to be met in next 2, 3, 4 months. So the supply side pretty tight, and which makes a very strong case, that aluminum prices may move up by another 5 to 8% in next 3 to 4 months. And considering what China did recently, cutting the export rebates, it seems that the global aluminum markets are going to be tight now. Here, one more factor comes about the Russia and Ukraine. So in all these things, if the supply side gets tighter from Russia also, then I think it's going to fire. So whatever bullish trend we are seeing right now and we are going to see is mainly because of the supply side more than the demand side.
Okay. Well, yes, that is an area that really seems to be getting under some pressure there. But gentlemen, stay on with us. We'll go for a very short break. When we come back, we'll talk about the opportunities within this space as well with what's happening in the global markets and, of course, Outlook 2025 on the other side. Welcome back. We're discussing metals in the light of what's happening in the global markets, and that is about geopolitics. That's also about strong demand for renewables, underinvestment into the industry, and then, of course, China and US trade wars. All of that can impact supplies and demand and, of course, prices going forward. Kunal, let me start with you. And you've already said that aluminum prices in the next 3 to 4 months perhaps could see a downside of 3 to 5%, but an upside of 5 to 8%. Would aluminum be your best bet going forward from here? How are you looking at perhaps a copper or a zinc as well?
I'm more bullish on copper than aluminum from the demand side. See, what has been happening with copper is that as we move into Chinese winter season, I think a lot of smelting capacity is also going to go off. So we've already seen, due to low TCRC charges, a lot of smelters have again started to scale back. So 5% of the smelters have cut their production in last 1 month. So going forward, the supply side is also going to be affected. A lot of Chinese smelters may close their operations. And remember, we are going to see some glut in the domestic market also. So because of that, the smelting coverage. So now smelters are going to shut down. And at the same time, the concentrate markets are in a pretty tight mode. So if you look at the copper concentrate market, that is very tight. The supply side was mainly coming from higher smelting capacity. Now going into the demand side. So we have a lot of pockets in the world where the copper demand is growing at a rampant pace. In BRICS, mainly India. If you look at in Africa, if you look at in Indonesia, everywhere, ex-China, there's been a significant demand growth in India. And from last 2 years, have come up with a double-digit demand growth in copper. So we remain bullish on copper. We've seen a good, healthy correction in copper prices. On MCX, I think it is hovering around 798, 800 rupees kind of levels. So 790 to 780 is accumulating range. And I expect copper to, move up at least by 5 to 8% going forward. In all these estimates, we are still not talking about the China's possible fiscal stimulus, which China haven't come up. They have been waiting. That will add fuel to the fire if that happens. So as of now, the conservative estimate for even copper is 5 to 8% upside from here in next 3 to 4 months. So copper number one, number two will be aluminum.
All right. Peter, what is your sense when you look at overall base metals as a sector? I mean, everything that we're looking at does sound bullish at this point in time, unless the demand really deteriorates. What odds do you see of that? And what is your sense on prices from here?
Well, building on that, what Kunal said, as far as global demand, it's very, very hot. Some sectors are doing extremely well in the sense of Asia and South America, Africa, and so on. So there's from the demand side. I feel as though that copper, probably, Manisha, it's going to whipsaw, and it's just been that strong barometer. Are we going to test 10,000 again? It was only a couple of months back and you were there, and then all of a sudden it's been sold off heavily. So possibly it's a time, as well as that, that downdraft. We've seen, I think, a consolidation. I wouldn't be surprised to test, the high 9,000s, but we've just got to see what happens over this winter period in the Northern Hemisphere. And really, the time as far as inauguration and what that impact's going to be is from a Trump administration to base metals and to really the whole complex. Really, every commodity is going to be impacted, from agriculture all the way through to base metals. So I feel as though we're going to strap ourselves in. It's going to be strong, relatively strong demand in 25, unless something happens from a geopolitical stance, and that changes really, and what happens globally. But overall, I think we're going to see pretty strong move to the upside, and 25 is going to be a dynamic year for trading.
Oh, well, absolutely. Nobody's doubting that, Peter. But with the kind of moves that we are seeing, would you rather put your money in gold and silver? Because that really seems to be doing quite well. Of course, after that huge profit taking that we've seen from the highs, there seem to be some consolidation and some people yet again moving back in.
Yeah, absolutely, Manisha. I think it was just that hot air came out of it, was stripped out, and that's not unusual. It's quite normal when you see a raging bull market down to that 25 odd. Now we're at 26.40. If geopolitics, and I'm just seeing this first strike from Ukraine into Russia, this is all going to, I think, magnify the attraction to gold and silver in the short run. If things escalate from there, Manisha, then naturally geopolitical concerns, flight to safety, and yeah, it's still 6 weeks to run till the end of the year, and I think we'll test those highs again, Manisha.
All right. So further gains expected in gold and silver, and of course the base metal prices are also a pick up on dips in that strategy there. Dhruv, you're looking at ferrous metals more closely, and you've spoken about steel in sense of demand and supply, but I also want to get your sense on prices from here on. Are we close to the bottom? Do you think these are good buying levels, good investment levels, or how are you looking at the scenario playing out from here?
See, Manisha, steel is a little different from base metal. There is a lot of overcapacities in the global market, and As I mentioned that, China being the dominant player and their exports are very high, that is depressing the market all over the world. So steel has become a very regional, or it is going to become a very regional commodity, wherein most of the countries are now, putting up anti-dumping or some kind of safeguard measures for imports of steel. So it has become a very regional commodity. To answer the question, again from the Indian context, we feel that prices are almost at a bottom level. We do not see a lot of correction from here. Although upside will also be limited, but definitely this is a period wherein you see an additional or incremental demand in the last quarter of every financial year. So from a demand perspective, we expect we are quite bullish, but prices we think that probably will remain stable.
Dhruv, I hear it a lot of times when people say that, well, yes, China is doing this, but India has its own market. And you rightly said it, it's becoming very local, very regional as we see from here. But with China really putting out that cheaper steel and India not able to sell outside the country, how are you looking at steel companies in that light? As you said, the margins have been under pressure. Do you see that improving?
So I think the situation is prevailing for last 1 year when China has been exporting very extensively. As I mentioned earlier, that their exports are almost at 8 years high. This year they would be touching 100 million tons. So mills have already, managed their supply chain. So they are, focusing a lot more on the domestic market. Some mills have, cut down their production. Some have shifted their production from flats to long, which has a better margin. So all in all, I think it's a balanced situation for the Indian steel mills. And for India, currently the major market is Europe, which contributes approximately 40-50% of the total exports, which will continue to remain. Although there is an anti-dumping investigation going on Indian cargoes, but which we feel that is a temporary. And if the results come, so exports to Europe will continue to happen.
Dhruv, one more question, and this one is on iron ore. And if I look at the prices from the beginning of this year, we were around 140 or so, just about holding 100 at this point. So clearly double-digit decline coming in for this one as well. Yes, when we started this year, a lot of people were not very bullish onto that one. Some even talked about 90 and levels of 80 as well. Are we going there, or do you think in and about 100 is how we'll end this year?
So we think 100 is a fairly decent level. But if you see in the second half of 2024, there were a lot of supplies which were supposed to come from Brazil and Australia. That was one of the reasons why prices had come down. But after that, there was a stimulus announced by China, and then again it picked up iron ore prices. But we think $90, $100 is a reasonable price. Do not expect to fall very sharply, at least in the short term. But yeah, in the medium to long term, there are additional supplies which are coming from Africa, Brazil and Australia. Longer term will be a different number, but in the short term, $90 to $100 looks fairly decent.
All right, that point is well taken. So gold and silver continue to be your top bet. But when it comes to base metal prices, copper, aluminum could give you good returns as well. And then, of course, it's steel and iron ore, which are not expected to decline much from here, but wouldn't give you much of an upside as well. But as all our experts have already said, there is just so much happening in the international markets, from those wars to those statements and, of course, anti-dumping duties in US and China. Currency would be an important factor to watch out, and so would be renewables. So all of that could make a lot of impact on many of these commodities. Gentlemen, thank you so much for joining in and for that conversation as well. And with that, that's all the time on Commodity Champions. Thank you for watching.